What's up everyone, Humble Farmer Taiki here, and welcome to this week's edition of Farms of the Week. If you like the content, please like and subscribe, and check out the premium Discord, link will be in the description below. So, the long-awaited STRK token airdrop just happened, and STRK is a thriving ecosystem where they raised $225 million. As you can see here, and the TVL is only a third of that. But look at look at this trajectory; it's going up. So it's a thriving ecosystem, and there's a lot of people upset with the airdrop allocation. So for full transparency, I didn't get the airdrop, unfortunately, even though I did use STRK, in like last year and whatnot. But that's fine. And if you actually look at this allocation, it's not bad. So half of it, so 7% of the supply went to the community, and so half of that is going to users, and then the other half is going to a combination of ETH stakers, like solo stakers, and also developers and whatnot, which I think is pretty reasonable. So I have no problems with this distribution. What I think I do have a problem on is the vesting schedules and the predatory nature of how VCs, insiders, and I guess ETH influencers, they just get all these allocations and then they just dump tokens on us. And I guess going back on this, if you look at the estimated supply of STRK in circulation, it looks like this, right? Where what is this, right? It looks like STRK hired SBF as a consultant for STRK tokenomics. And if you look under the hood, what's going on here is, if you think about it, most tokens, whenever they launch, there's a 1-year cliff for team members and investors, and then there's a 3-year vesting schedule. So teams have to wait a year essentially to get their tokens. And this time around, STRK said, you know what? We technically, we launched our token 10 months ago, right? It's not tradable, but we technically launched it. So technically 2 months from now, it's 1 year from TGE. So technically we should start to get our tokens. And the circulating supply of STRK is going to triple in 2 months, even though they really haven't shipped anything. I mean, they shipped an L2, it is what it is. And a lot of people are upset because, it's another case of teams just, getting their exit liquidity without really having to drop anything. And I'm not saying anything critical of the team. I'm sure they're working really, really hard, and I'm not one to criticize because I'm literally a dude on the internet wearing a farmer hat and a rake. But what is this, right? To align long-term incentives of investors and early contributors with the interests of the STRK community and following common practice in decentralized ecosystems, we're going to triple the circulating supply in 2 months. So definitely not bullish, this token. Definitely not bullish. I'm sure it's tradable. I'm sure you can buy the launch and maybe sell 50% higher or something, which I will definitely not do. But really, really. And I think this is kind of adding to, this VC hate, right? This VC hate, insider tokens, insider team, they're dumping on us. But, let's kind of empathize with them, right? Let's try to take the other side. So let me become serious for a little bit. Cue the sad music. So let me put down my rake. Let me put down my hat, and let me adjust my hair. So this is serious, Taiki. Let me even increase my face here. This is unprecedented video production here. So a lot of people hate on the VCs. A lot of people hate on the teams. But without the VCs, without the teams, there will be no crypto. I mean, there will be no DeFi or on-chain ecosystem because someone has to fund them. And there's only a few select humans on Earth that's willing to just create something out of nothing that doesn't accept any VC funding. And that's, it's hard to expect crypto to just have a thriving ecosystem without teams and VCs. And sure, VCs, I guess a way to think about it is, VCs, they're people too, right? They have feelings too, they have feelings, they have families to feed. And sure, the VCs, they sunk $225 million into a non-existent ecosystem. Sure, DYDX left STRK to create their own Cosmos app chain. Sure, no one uses STRK. And sure, anyone that downloaded the Argent wallet knows how bad the user experience is. But team members, they're humans too. They have feelings, they have families to feed. They want to go out at a bar on a Thursday night and say, this round's on me, right? They want to flex, to their friends. VCs, they have jobs. Everyone has jobs. They want to clip their 2% like management fees, and they want to be able to recoup some of their investments. And they don't want to have to explain to their LPs that we fucked up. So they convened with one another and said, you know what, let's pay some influencers, let's shield this token, and let's triple the circulating supply in 2 months, so that we can hedge our token on perps, so that whenever tokens start to vest, we're already getting our exit liquidity. And what even is the? Let me check the. Let me check the Stark token valuation here. Okay, so let me make my face smaller here. Okay, so I logged into Avo. Let's go to Stark. Okay, 173. So an implied valuation of $17 billion. Yeah, I mean, like VCs, they're human too, right? They just want to launch the token at $17 billion valuation, hedge the token via perps. Everyone knows they're overvalued currently, right, at the current where their product is. But let's try to empathize with them. Let's try to empathize with these VCs. Let's try to empathize with their predatory tokenomic structures. They just want to dump, right? I mean, they want to dump on it. They want to dump on retail. It is what it is. They get to decide the rules. It's their project. So who are we to criticize, right? So that being said, we can turn off the sad music now. Let's go back to unserious Taiki with the farmer hat, humble farmer Taiki here, and at least they dropped the token, right? I guess they had to drop a token to generate exit liquidity, but this is the meta, right? Just okay. And anyways, hopefully you could catch my sarcasm there, but I do want to pivot the conversation to more serious topics, and I do want to give my thoughts on the airdrop, because although I do want to empathize with the VCs, there's been a lot of anti-airdrop farming sentiment amongst VCs. It seems like a lot of VCs are just upset that retail is making money on airdrops, and they think that this is too frothy or too crazy. But I will take the other side on that as well, because if you're betting against airdrops, first of all, I see no reason for the airdrop meta to not continue, because I'm not like a legal expert, but I'm sure that airdropping tokens is like a better way, or it has like better legal repercussions than just giving tokens to the team, like market makers, and just dumping it and making retail pie in the open market. So I'm sure there are legal, for sure there are legal implications. But even if that's not true, most projects, think about all the tokens that's launched. Most of them, if not all, are just airdropped. And betting against airdrop farming is kind of like betting that teams in the coming weeks, months, and years to not drop tokens in the coming bull market. So why are people saying that the airdrop farming is gonna die or it's gonna be diluted? Sure, it is being diluted, right? I think one rule of thumb is that on average, I think EVM airdrops are going to be more diluted than non-EVM airdrops. Why is that? Well, everyone has a MetaMask wallet. Everyone has money on EVM chains. Why? Because most of the wealth on chain lies on Ethereum mainnet and L2s. That's normal. So if there's a new airdrop farming opportunity on an EVM chain, what's the barrier to entry? Very, very low, right? You just take ETH or you bridge, and then you just do stuff, and then bam, you get points or something. So on average, I think EVM airdrops are going to be super diluted. On the other hand, I think non-EVM airdrop farms are going to be less diluted. Why? Because there's more barriers to entry. To enter the Solana ecosystem, you have to download the Phantom wallet. To airdrop farm Celestia or Dymension, you have to download the Kepler or Leap wallet. That creates more barriers, that creates more friction, and therefore more people are less likely to go through the efforts to actually take those steps. There are exceptions, right? I'm not saying that you should not farm anything in EVM. Technically, the Manta airdrop was pretty good if you think about it. Use Bridge ETH and you get tokens. Blast probably will be decent, but it might be worthwhile going into other ecosystems. Eigenlayer I think will be such a I think Eigenlayer is going to launch at such a high valuation that yes, it's diluted, right? It's $6 billion TVL or something, but I think the token's gonna be worth so much that I think it's still worth farming Eigenlayer, and restaking ETH across directly with Eigenlayer or just via liquid restaking protocols. So There are exceptions, but on average, I think, farming non-EVM is definitely like where the edge is. And that's primarily where I focused my attention on, which is mostly Solana, Celestia, and Dymension. So let's talk about, I guess, the modular ecosystem. First, Celestia. So Milky Way, which is a liquid staking derivative provider, just introduced points today. And they're allocating 10% of the supply, the Milk token. And look, Milk token, like that's so bullish. The ticker is so bullish. And the liquid staking derivative is called Milk Tia. So bullish. I used to work at a milk tea shop, like a boba company, like while I was a student and after college, like headquarters and whatnot. And I love milk tea, so I'm naturally drawn to like milk tea, right? 10% supply, reasonable. And you can go to the Milky Way application. You can stake here for milk tea, and they get points. I believe if you go here, click the points, how it works. Let's go back to the thread. One milk tia gives you 1 milk point, right? You can milk those points once a day. So if you hold 10 milk tia and you hold it for 10 days, you'll get 100 points. And surely at some point, these points will be redeemable for tokens, and they're going to drop a token in the first half of this year. And if you look at the Jito airdrop, I mean, that was huge. Literally, like my analysts, not me, right? My analysts, right? Like the HFA research analysts, they got like 100K worth of tokens by staking like $100 worth of Jito Sol across like 5 wallets, which is like actually insane. I don't think this thing is going to be worth that much. Why? Because more people are aware that, the Jito airdrop was worth a lot more than I expected. Let's farm Milk Tia. So naturally, it's going to be more diluted. I forgot when they launched, but back in December, I staked my Tia with them, and fortunately for me, the point system is retroactive. So some wallets that I have like 2 Tia staked, sorry, 2 Milk Tia staked, I have like 100 points, even though I barely put that much capital into it. So hopefully it's gonna be worth a lot. I think there's kind of this trend around. Like obviously Tia is like trading at $19 billion FTV or something. It's worth a lot, and whoever can become the number 1 liquid staking derivative provider can command a pretty high valuation. Just look at Lido, right? Even Stride, they're allocating 5% of the supply to people that hold a stake Tia. I also think this is a pretty good airdrop farm. The alt layer airdrop rewarded people that staked Milk Tia and stake Tia as well. So if the meta becomes that you can hold LSDs, right, liquid staking derivatives of Tia, and still receive airdrops, I mean, there's no reason for you to not do it. And 5% of the supply, I mean, that's a lot. I mean, Stride, it's been up only, still at $500 million. I still think it's pretty attractive valuation wise. Of course, it's kind of hard to buy into this. We did write a research report on it on Stride back in September. It was like 70. Okay, I missed. God damn it. I missed out on the 10x or 9x essentially. My mindset at the time was that, I could buy Stride, but I could, stake my Tia with Milky Way and I'll get this airdrop. So I don't need to expose myself too much to LSD tokens. Obviously, the correct decision was to do both, right? Just stake Tia with Milky Way, stake Tia with Stride, and just buy the Stride token. But $500 million seems pretty reasonable to me, actually. But I'm a boomer, right? I'm mid curve, so I'm just staking a bunch of Milk Tia across numerous wallets, and hopefully these points will be worth something. So there's that. So pivoting to Dymension, Dymension, the token, I mean, it's trading at, this is pretty ridiculous, like $8.30. So I've been talking about Dymension since last year, December, and I've let it be known that I'm pretty bullish this project. If you think about it, if you think of the modular ecosystem, ETH, right? ETH can do data availability, settlement, and execution all in one chain, but no one wants to do that because there's like 12 transactions per second, and it costs like $50 to do a swap on mainnet. So the ETH scaling roadmap says, let's use EigenLayer for data availability, let's use ETH for settlement, and then let's use L2s for execution. So that's the ETH scaling roadmap. And then Celestia says, Celestia will also focus on data availability, Dymension can focus on settlement, and then we can have app chains that focus on execution on top. So the idea is, Celestia and Dymension are some somewhat of a competitor to the ETH scaling roadmap. Not really, because I mean, they just launched, but that's kind of the narrative. And then if you go to Dymension, and I think if you go to the testnet, I'm not sure we can check, but there were like 10,000 rollups on testnet. They were like, okay, you can go here. If you go to the testnet, there were like 14,000 rollups. If one of them just does an if one of them does an airdrop to Dymension stakers, and it's worth like a decent amount, then that can even kickstart somewhat of a narrative. I have low expectations, to be honest. If you think about staking TIA, right? TIA launched in November, and the first airdrop that hit people's wallets happened for Dymension in February. So is it reasonable to expect people to stake Dymension and receive an airdrop immediately? I don't think so, but I am bullish, and for that reason, I do have a validator, HFA times DeFi Dojo. We're number 34, so thank you for everyone's support. What I'm personally doing is I'm staking with myself. I'm also staking with other validators like Stakecedo, Igloo Company, Lavender 5, Imbrate. To be honest, like if a validator is in the top, like let's say 69, I think you should do your own research, but I think they're like just good bets, because they're all like fungible, right? They're all basically all validators are essentially commodities. Maybe that's like a hot take, but just being honest, right? Just stake TIA, receive airdrops, stake Dime, receive airdrops. I talked about how TIA is the next 3-3, right? The 33 of this cycle, because everyone's staking. And then if everyone stakes TIA, they receive Dime, and everyone stakes Dime, then maybe TIA and Dime is like 3-3 and 9-9, right? If you think about like the ohm reference with like leverage and whatnot. Always do your own research. I think they're good. If you got the airdrop, I think staking some of it and maybe selling some of it, could make sense. To be honest, I haven't sold a single thing because hashtag diamond hands, and I am bullish. And I think, TIA and Dime are potential like bull market outperformers because of like the pure fundamentals it provides. Does that mean it's a good buy right now? I have no idea. Okay. But all I can say is that I'm bullish. I'm backing it with my actions here. I haven't sold, and I'm also launched a validator, and staking it across multiple validators could be worth it. And spreading it across different wallets. If you want to know what I'm doing with like my ultimate Dime staking operation, make sure to check out the premium Discord. Link will be in the description below. You can check out what I'm doing personally with my wallets. This make it sounds like super fancy, but it's kind of alluding to like the ultimate TIA airdrop farming operation that I laid out in mid-December, 2 months ago, in the premium Discord as well. And I got like a 6-figure airdrop for Dime. So it worked. We'll see if it works again. No expectations, but just letting you know. So let's jump into the monolithic ecosystem, which is Solana. So this year, I think last year I think what generally happens is that in the bear market, people kind of just rotate back into Ether for the relative safety and the comfort, and because people don't know which alt ones are going to recover. And then as we enter a bull market, people are slowly coming to terms that maybe ETH alone, I should diversify away from Ether. Maybe I should have some monolithic exposure. And I should have some modular exposure. So, monolithic is Solana, and the modular is like Celestia that I mentioned, and other Eigenlayer and like other DA providers and other execution settlement. I'm sure there's gonna be a bunch of tokens, but that's kind of, I think, the mindset that people are starting to have. And like I mentioned, I don't really see a reason for the airdrop meta to end. And I think the Solana ecosystem is one of the best places to airdrop farm. Me personally, I'm a mid-curve, right? I don't really want to buy Sol, just just slam it here, right? At like $118 or $15, because I faded it on the entire move up. But I did allocate a sizable amount of my portfolio into GLP. And GLP is similar to GOP. It's roughly 44% stablecoins and like 56% risk assets. And it makes money from all the fees, all the swaps that route through the pool. And whenever people trade in and out of perps on Jupiter, they pay a 10 basis point, so 0.1% open fee and the 0.1% closing fee. The fee structure is so predatory that if you're trading on this, you're most likely going to lose money. But people still trade because they're degens. And then if you're in JLP, over time, just look at this price chart. JLP. All the fees are auto compounded back into the pool, and it's literally up only. So I think I'm viewing GLP as like a, I mean, smart contract risk and whatnot, but it's kind of like a savings account. Back in like a year and a half ago, like basically like after like FTX imploded, I made a video saying that I view Trek Crypto on Curve and GLP on GMX as my crypto savings accounts. And fast forward to now, those yields are not that great, but they're still good products. And I still think that these LP tokens kind of act like pretty good savings accounts. If crypto savings accounts, if you think about it, if you already have money in crypto, I mean, you're already taking on a significant amount of risk. So, if you want to think about a savings account, then maybe something like this that pays 140% APY, that still gives you downside volatility, downside, that mitigates downside, but still gives you upside whenever the crypto markets go up, like this. I think it's worth considering. And who knows, if if you're providing liquidity, then technically, you are helping the protocol. So maybe I'll receive a Jupiter airdrop for season 2. Another thing I think is worth farming is Drift. I do like Drift. I've met with the team a couple times. I like them all. I think the team is pretty strong. They raised $23 million, which is pretty impressive for an application. If you deposit money into these turbocharger or supercharger vaults, you're basically giving money to the team. Because if you click on deposit here, it takes you to this, and you're basically giving money to this market maker, which is basically the Drift team that puts in volume, that's like doing market making strategies, that has like a APY of like 42%. So I mean, on its own, it's a good stablecoin farm, but also if you get Drift points, I think it could be worth it. If you deposit money here, it doesn't show any points. However, if you click on the point section, I believe the number 2 and number 3 Drift tours, right? These points are the market making vaults. So I think, whenever the points do get distributed, or like the tokens get distributed, it's going to go like pro rata to, whoever has money deposited into these vaults. So I still think it's a pretty good farm. It was confirmed, right? So David, right? Part of the Drift team, I asked them, are circuit vaults getting points? Still shows 0 for me. It won't show on the page, but they are accumulating. For lending and borrowing, it does not give points. So you do have to put in volume to get these points. But if you deposit into these vaults, the market making vaults are putting in volume on behalf of your money. So that's kind of the way to view it. Markets just pumping. It's pretty crazy. I mean, I remember a year ago, I mean, it was pretty nuts, right? I guess I can even, let's actually go to my studio here. I remember a year ago, I was just making videos, no one was watching it. You go to my analytics, no, let's go to the subscribers here. I was like losing subscribers, every single day. And then starting in October, or November, right, I started to gain subscribers. And I guess if you overlay the social metrics on, I guess, on the Solana chart, I mean, in November it was like $40, and now it's like, 3x from there. So I guess, it is important to keep track of retail. And I guess if you're full-time in crypto, it might feel like things are frothy just because people are getting, crazy airdrops, people are making money on meme coins, and tokens are pumping. But if you look at, I guess, if you look at the DeFi YouTubers, I guess, like the on-chain YouTubers, it looks like this. So in 2021, we had 2 peaks. One time, in like Q2, and then second time in Q3, Q4. And then, I mean, during the bear market, it was like awful. And yes, I mean, we are seeing more fraud, but this is nothing compared to what we saw last cycle. So I think it's also worthwhile to just consider, bull market narratives, shedding yourself from bear market PTSD. Yes, retail is back. Yes, people are watching videos. Yes, people are coming back. It does feel frothy, but if you just compare the froth to, what we saw last cycle, and if you expect this cycle to be bigger than last cycle, which I think is a reasonable expectation, then I don't really see reasons to be bearish, to be honest, especially when, the stock market is just chatting at all-time highs. I mean, people's been worrying about a recession, but it just keeps going higher. And in this environment, I feel like it's supportive of risk assets. And at some point, the money has to trickle down to crypto, right? And what types of projects will do well? Of course, the majors will do well. Maybe the alt L1s that survived and their metrics are improving, they're going to do well. AI coins might do well. DeFi projects making money might do well. And I think it's worthwhile considering just like turning your gear to a bull market. And even if you're afraid of, like, let's say, potential downside, maybe instead of like holding a bunch of cash, maybe just allocate money to things like GLP, like liquidity pools, half USDC or half stablecoins, half risk assets, because the fees are auto compounded. It goes up only. I don't think it's that bad of a strategy. Yes, it's gonna underperform to the upside, but it'll also outperform to the downside and to the side, in like choppy markets, because people are gonna get like liquidated and whatnot. So it's just things to consider. That's gonna be it for me. I guess the key takeaways. I guess if you want an airdrop farm, maybe spend more time on non-EVM chains. Step 2, just understand that yes, things are frothy, but it's not that frothy, and you can access this for free on my dashboard at hfaveresearch.io. You can view this for DeFi channels, YouTube channel, NFT channels, and mainstream channels. And step 3, or point number 3, the most important one: empathize with VCs and insiders. They're human too. So thank you guys for watching. See you guys tomorrow, or see you guys next week. Bye bye.